Rich Bruner, how are you? Joey Levi, what's happening? Money Man Myers, hey, you back again. I haven't seen you in a while. I remember you signing on a while ago, Money Man Myers. All right, let's get this party going. Brandon, how are you today? Hey, it's Precaris. What's happening? Darbin Lee, how are you today, dude? Evening. It is a lovely evening, I must say. Hey, Doc, how you doing over there, man? All right, let's get this party started. All right, it is Saturday, the 14th of September. Holy cow, the 14th of September. Not a whole heck of a lot happening. Next week, which is Monday, starts week number 12 for the third quarter. The third quarter, there's 4 quarters in a year, we all know that. 13 weeks in a quarter. Well, Monday is week number 12 of the third quarter. Rich Bruner, thoughts on MU? Is that Micron Technologies? Is it MU? Micron Technologies. All right, first thing I want to see is the high, the low, where was it, where is it, what direction it's going? Currently at 91.22. The 92s are going for $2. That is over 2%, but here's the thing with MU. All right? Here's the thing. Okay, Rich, take a look at this. Okay, here's our high, here's our low, here's the direction it's going. What's going on with it? Well, let's check and see if MU has dividends. MU, I think it does. I'm not 100% sure, but let's go ahead. Yes, it does. Well, that don't look good. Look at this, Rich. 91, 1. 92, 93, 94. So 91, 92, 93, they had 1 dividend per year. And it was only 1 cent. Not the greatest in the world if you think about it. But 94 goes to 4 quarters. 95 went up, 96. And look at this. No dividends from 1996 until 2021. So, sorry, Rich, I'm going to say no to Micron Technologies. Okay, just don't have the dividends. Look at it. 22, 23, and 24. And they're not really increasing that much. It goes from 10 to 12, and it's been 12 for the last 3 years. No increasing whatsoever. So, more than likely, not totally profitable. And if they're not totally profitable, well, they're not going to increase their dividends. That means no for me. Frank, Mark, how are you guys doing to PK Park? Darren Brimberry, how you doing there, Darren? All right, Billow and E. Cordell. Cordell, what's happening? Bassiacker. Bassiacker. Kind of curious. What does that mean? Or is it Bassiacker? Oh, Bassiacker? Yaker? I have no idea what that means. Eric, how's it going? All right, so I'm going to say no to Micron Technologies only because it doesn't have, consistent. And yeah, Mark, sorry, dude, you really. All right, you know what, Mark? I haven't done this in a while, so let's take a quick look at it. Oh, for realty income. Okay, Mark, take a look. O was currently at its high at the moment. It's a little too high for me. But here's the thing. Look at this. This is monthly optionable stock, which means I can only do a covered call once a month. Now, I like covered calls. I like covered calls on a weekly basis because it allows me to get a weekly cash flow. Now, for those of you that are new here, I like simple, safe, predictable, and consistent 1% per week. The only way I can get that is with companies that have consistently increased their dividends. Okay, I like 20 years of increased dividends. And 2, weekly options. And unfortunately, O, Realty Income, doesn't have weekly options. So O is a no. Sorry about that. Flash Frozen, how are you doing? And Ms. Tyner, is that right? Miss Trina, how are you today? 49er, Tammy, how are you doing? Eric, Our Homes, cool beans. Austin, what's happening? And is that Liam? Liam's and Dex. Peace for all. I like that name. It's a cool name. Nikki Wren's deal. AAP. Well, let's take a look at AAP. Now, Mark, I like, wait a minute, I thought it was IBM. What the heck is IRM? IRM. Iron Mountain. Okay, now, Mark, didn't we just have a talk about this, about O Realty? O Realty is a monthly optionable stock. Okay? Kagdala. Pожалуйста. Over there on YouTube. Okay, Mark, we just had a conversation about O Realty being a monthly optionable stock. And then you give me this thing. This is another monthly optional stock. O is a no. Sorry. Not, niet. No. Da, niet. Niet. O, niet. All right. IRM. Mark, sorry, dude. Monthly options just don't work for me because they don't pay the same amount of money. If we take a look, it's currently at 117. Well, if I buy it, the closest strike price is going to be the 115. But if I sell the 115s, I'm losing $2 right off the top. And then I'm losing $2, and then I'm losing 37 cents. It means I'm walking away with nothing. I don't like monthlies. The numbers just don't work. Nikki, how are you? Eric, it's Jay Guapo. Poseidon's last molar. Roger that. You got that? Flash frozen. Want to take a look at Advanced Auto Parts? Hold on. Picaris wants to take a look at Hershey. Advanced Auto Parts. Now, we did Advanced Auto Parts this week because the numbers looked great. Okay, let's take a look. Here's our high of the year. Here's our low of the year. A year ago, we're at 59. The high was at 88. And the bottom's here at 35. Well, we're currently at 41. She's bouncing off that 30-day bottom. I love a 30-day bottom. Luke, do you believe there is more FDIC insurance than Federal Reserves to back it up? Nope. Not at all. Okay, someone's going to get the brown end of the stick in this scenario, and I hope it's not you guys. Okay? I don't trust the Federal Reserve. I don't trust the federal government as far as I can throw them. All right, let's get back to AAP. Okay? Currently right here, let's take a look at the last 30 days. The last 30 days. Here we go. 30 days ago today, we opened up at 60.65. A day later, we have the high at 63.12, way up here. They have this big gap down, then she's just kept on dropping. Wednesday was the bottom. Thursday's an update. Friday is an update. Perfect opportunity to jump in on Monday, because I like 2 days to the upside. Now, when you're investing in the stock market, you're going to make most of your money buying low and selling high. Okay? You can't get any lower than the current bottom. Well, here's the current bottom right there. All right. So, 41.60. If I sell the 42s, I'm getting 76 cents. Okay? That's just shy of 2%. Well, I like 2%, but here's the thing. If she goes up over 42, I'm going to collect an additional 40 cents because the purchase price is 41.60. Okay, but here's the question. You need to ask yourself. Number one, does it make sense? Buying a stock at a price, 41.60, selling the rights, which gives somebody the opportunity to buy it from you at 42. Now, I can do this on Monday. I can buy it at 41.60, sell it at 42, but that contract stays active until Friday afternoon at 4 o'clock. You psyched me out. Flash frozen. Dude, can't help you out, man. Hershey. Picaris wants to take a look at Hershey. All right. Hershey. HSY. All right. Here's our high. Here's our low. Here's where it was. Here's where it is. Okay, last year was at 212.50, bottomed out at 178. She went up, pulled back, up, down, up, down, up, down, up, down, up, down. Yeah, keep on moving. Right now we're sitting at 200. 200 at this moment in time. Okay, so The 200 is going for $2.60. That's just below 1%. Okay, because it's actually going for $200.83. Okay, but the option is only worth $2.60. So once you subtract that 83 that you're losing, well, then you're only walking away with 180. It's not 1%. But if you like Hershey, total different story, because there's nothing wrong with this at all. If you like Hershey, that's the big dipper. All right, so let's look at the last 30 days, because the last 30 days gives me a good idea of where it's going next, because stocks only do two things. They go up or they go down. Okay, 30 days ago, down, up, down, up, down. Well, now she's going to the upside. Okay, if you like Hershey. Maybe I spoke too soon. Yeah. See, I did a full show last night, which was 2.5 hours. Tonight, I don't think it's going to work because I'm starting to feel it already, and we're just getting started. All right, so that's Hershey not giving 1%, and it is in an uptrend at the moment. So if you like Disney, fine. If you, Hershey, fine. If you don't, hey, that's fine too. GIS, goodbye for Monday. Let's take a look. No. General Mills is monthly. Okay? Monthly options I don't do because the numbers just don't work for me. If you like them, hey, more power to you. Okay, but look where she is. Here's your high right here, 76, currently at 73. She dropped down, now she's going back up. Yeah, that's way too close. Look at this, 62 is the bottom. It was from 62 to 76. That's a $14 increase. Okay, that's 20%. There's going to be more profit taken than just $3. Buying Monday. All right. Oops. Oops, where did it go? All right. Does stock investing benefit society? Well, of course it does. Look at it this way. If it wasn't for the stock market, now the stock market is basically kind of like, let's call it a bank for less, for clarification purposes. Now, let's say you have an idea and you want to go into business. Well, what are you going to do? Only one person. Well, you need to hire people. So you got to get a bunch of people together, have the same goals, have the same goals in mind, and just be able to want to create a product or a service and deliver it to the public. Okay, great, fine. But here's the thing. You need money in order to do that. And to do a good job of it, well, you need to hire some people to go along with you. Okay, so if you are thinking of going into business, you need to hire people. Well, you need money in order to be able to do that. So what do? You either go borrow the money from a bank, well, now you're in debt. Or you can do what is called selling parts of your company, a portion of your company, in order to collect money in order to be able to go into business. So what are you doing? Businesses hire people, okay? Your neighbors, your friends, your relatives, the kids you went to school with, your uncle's brother's sister's best friend, all these people in society as a whole are all working somewhere to contribute to society. Because humans are the only species on the planet that actually pay to live here. Well, then how are you going to get money in order to pay to live here? Okay? Unless you're one of those fortunate ones that had a trust fund or inherited a bunch of money. But if you're like the rest of the 90% of us, well, we have to get our asses out of bed and go to work every day. Well, we go to work for a company. Well, we go to work for a company. Well, that person, whoever runs that company, borrowed money or sold a portion of it to create the mess that we call the stock market. TMF, good for this week. We'll take a look at it. So I'm not saying, Bill, if that explains it, but think about it. Almost everybody you know, or everybody you went to school with, or the people down the street, well, they work somewhere, okay? Someone has to pay them. So they go somewhere to do work to contribute to society, whether it's flipping burgers at Burger King, whether it's sweeping the floors at a school, whether it is a tax accountant, do whatever. Everybody has to contribute to society in one manner or another. So the stock market is a place where people sell a portion of their companies to raise money to be able to pay for raw materials, employees, salaries, insurance, all that kind of nice, neat, fun stuff. It is a big cog in the wheel of life, okay, or at least here in the United States, because we have a consumerist society. So you you want to buy something, well, someone has to make that. Well, who's making it? Well, someone is making it, and that person who's making it had to get the money somewhere, somehow, to come up with that product or service. Well, where's that going to come from? It's got to come from somewhere. So the stock market is kind of like, I don't know, it keeps everybody contributing to society. So investing in the stock market, it keeps the cash flow rolling. It keeps the machine lubricated and rolling forward. Ash, Gladstone, never heard of it. Let's say I'm starting my own company. How would I set myself up with investors and sell stocks? Ooh, I'm in the same scenario. I got a couple 100,000 shares in my own company that I'm kind of figure out a way to be able to sell them publicly. And that is a whole bunch of paperwork. Paperwork and a bunch of BS. You got to follow the rules from the FCC and FTC, Federal Trade Commission. Anyway, yeah. Rude dude, back again. Woohoo! Ash whooping. Ash whooping. Gladstone. Gladstone. Yeah, no. Sorry, Ash. Monthly optional stock, no thank you. Just doesn't work. TMF. Felix, how are you doing today? TMF. TMF. Direxion shares daily 20-year treasury bills. Yeah, that's going to be a no. All right? That's not a stock. That's an ETF. And I don't do those. And no, it doesn't look good for this week. Look at it. Okay? Look at TMF. 30 days ago at 58, drops down to 50, 56. Shoots up, pulls back. Look where the high is, right there. 2 days to the downside? Yeah, no. Too high for me. When is your company's IPO? That's going to be quite a while. It's going to be another year or so. All right. Flash Frozen, thanks for your work. You're welcome. Sinbad, hey, nice to see you again. When a stock turns down, how about closing the covered call until the price recovers to profit and then sell? Well, here's the thing, Sinbad. It sounds good in theory, but nobody knows how many days it's going to actually go down. Now, some companies go down 2 or 3 days. Some companies go down weeks. Let's take a look at, okay? Now, look at this one right here. Here's your high back at the end of December. And look at down, 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 down. Okay, here's the bottom here, turned around, starting to go back up. Well, it's got a long-ass way to go from here all the way back to the high. So that theory doesn't really work. Sinbad. Okay? So, if I bought it here and she drops, it drops for almost a whole year before she turned around and started going back up. I like to buy on a Monday and hopefully be out on a Friday. Okay? I take a look at the numbers and I see what is the best position for me to be in to jump in a Monday, be out on a Friday, and grab my 1% per week. Make sense? Steve, AEO. A, E, O, U are the vowels. A, E, O, U. Okay, here's your high. Here's your low. Here's where it was. Here's where it is. Here's the direction it's going. Look at it. It's in a little channel going to the side. Cool. Currently at 1978. I remember 1978. I had a blast. All right. 2095. You'd actually be looking at the 20. 20 is going for 29. So look at the last traded price, 1978. Well, 1850 and 2095. Well, if we go by the last traded price, the closest strike price is going to be the 20. And the 20 is paying 29 cents. Okay, that's over 1%. And I like over 1% for AEO. But let's take a look at the chart. Okay, a year ago we're down at 15. We bottomed out at 14 and a half, topped out at 26.50. Well, now we're at 1978. So where do we think it's going to go next? Now for that, I like using the 30-day chart. Because think about it. If I'm jumping in on a Monday and I want to get out on a Friday, well, I like to know what the last couple of weeks have been doing. Okay? 4 weeks ago, we're just going sideways a little bit. Okay, sideways, sideways, then we slowly move up. Okay, so here's our 30-day top. What usually happens at a 30-day top? Well, it's that. 1 day to the downside, 2 days to the downside, then she drops. And then she finds the bottom. Well, here's the bottom. How do you figure out a bottom? Well, the bottom is the bottom, and it's separated by a couple of days to the upside afterwards. Now, Monday is the 30-day bottom for this company. Tuesday, Wednesday, Thursday, Friday are all 4 up days. So like that isolates. Here's the top, here's the bottom. What usually happens from a 30-day top, 30-day bottom, what happens next? Well, usually it goes to the upside. Well, great. AEO is currently at 20 bucks, and that's paying 29 cents, which is over 1%. Now, when I say I like a simple, safe, and predictable 1% per week, well, I want companies that have consistently increased their dividend. AEO is decent company. We bought some earlier during the year. Let's take a look. What do we have next? NCLH. All right, Steve, I'm going to tell you right now, I never heard of it. More than likely it's going to be a no, but let's check my theory here. NCLH. Okay. Norwegian Cruise Line. Whoa. NCLH. Oh, okay. That's why I didn't hear of it. I've never heard of it. It has no dividends whatsoever. Now, Steve Tucker, you're relatively new here because I'm really good with names, and I notice when people have been here for a while. All right? Now, if it has no dividends, what are we looking at it for? Because the channel, the show, is basically dividend investing for weekly cash flow. But if it has no dividends, why are we looking at it? Badfish, Comcast. Ooh, I like Comcast. All right, now one of the reasons why I like Comcast came out in 1964, and they get over 60 million customers paying them every single month on CMCSA. Okay, take a look. Here's our high, here's our low, here's where we were, and here's where we are, 39.55. Well, the 39.75, the closest one is going to be the 40. That's not good. The 49.50, we're losing 25 cents. Take 25 cents off of that. Nope. Sorry, at this moment in time, Comcast, the numbers just don't look good. Don't get me wrong, I love Comcast. I bought Comcast several times this year. Okay, this will be this will be the fourth quarter for Comcast. Okay, now Comcast has its dividend the first week of the quarter. So the next time Comcast has its dividend is in the fourth quarter. That's only 2 weeks away. Okay, so I've already bought Comcast, I think twice this year. But today, the numbers just don't look right. 49.55, the 39.45s, sorry, 39.75s, the 40s are going for 31 cents. That's not 1%. And I'm going to say no. Okay, Picaris, you want to know when I'm doing my IPO? I don't know. It's going to be a while. I'm still trying to gain some more interest from what do you call those? I'm trying to gain some more board members. Okay, I need 13 board members altogether. Okay, so and I have to wait to get all 13 board members, which takes a while to find them. Can you talk about Michael Saylor, his strategy, and about his company MSTR? Fatos Dan. Hey, what's happening? Which stock are we talking about? Comcast? Okay, we're about to go over to MSTR, which I'm pretty sure it's going to be a no. MSTR. MicroStrategy. Okay, so let's take a look at MSTR. MSTR. What kind of dividends have they been paying? Oh, little band Bitcoin. You see this right here where it says there are no dividends in the selected time period. What does that mean? Well, this channel here is in this trading strategy is dividend investing for weekly cash flow. So if this company has no dividends, it has no purpose for being here with us tonight. No dividends, no thank you. Sorry. All right, let's keep on going. We buy now. I have no idea which one we're talking about. AEL. What the heck is AEL? Now, AEL. Usually if I have to say something like that, it's going to be a no. And it is. There are no options whatsoever on that stock. That's a no. Okay, so what I like is 20 years of increased dividends, which means they got to have dividends. And they got to have weekly options. This doesn't have options, so it's going to be a no. Sorry. Buy low, sell high. Is that the key phrase? Yeah, I got a whole bunch of key phrases. That's just one of them. Is that what you got to do? Well, everybody knows that one. Where can I buy? Okay, what is your percentage of success each week on Fridays? Well, I currently have 6 trading accounts. Okay, for whatever reasons. Okay, I share 3 of them publicly with you guys. 3, I do. So, one account, I have 0 losses since the beginning of the year. My second account, I get 2 losses since the beginning of the year. Third account, I have 4 losses since the beginning of the year. Now, all my trades are easily searchable on my website, the10minutetrader.com. Okay, here they all are, right here. All right. The timestamp right over here, 7/15/24. Walgreens, LUV, that's Southwest Airlines, Wells Fargo, Macy's. Okay, tells you all the positions I jumped into that week in this particular account. Oh, look at that. 2.26% for this account for this week. Here, 6 stocks, AEO, Bitto, Win, MPW, Kohl's, and Wells Fargo, 2.01%. Here, this account, Macy's, MPW, and Siri, 2.12%. Okay, so all my trades are here. You can see them at your leisure. IEP. Oh, Inobi. Is that right? Inobi? I don't remember 1978. I don't. I also had a Robinwood. Never heard of Robinwood. IEP. That's Icons. Isn't that Icons? Yeah, that's going to be a no because his dividends are way off. Let's take a look at them. Okay. IEP. Yeah, Icon Enterprises. Okay, so let's take a look at the dividends. And this is one of the reasons why I don't like it. Okay? So, are you ready? Are you ready for this? 1988. Okay? 1988, 49 cents. 1989, 49 cents. 1990, 49 cents. Well, they're not increasing their dividend at all. 1991, 49 cents. 1992, 24 cents. Is that right? They cut it in half? Well, what does that tell you? You got a company that 4 years doesn't increase their dividends at all. Then they cut the dividends in half. Oh, holy shit. They cut it in half again. Sorry. So here's the thing. You could do whatever you want with your money. Perfectly acceptable. You want to, buy Susie Seashells, Tommy's tumblers, whatever you want to invest your money in, you be my guest. Me personally, I will not invest in a company that's not consistently profitable. Now, a dividend is a portion of, hey, Drozik is here, Bob Wilson's here, cool beans. A dividend is a portion of the profits that goes back to the investors. So let's say you make $100 profit per share. Let's say hypothetically. Let's say 20% goes back to raw materials. 20% goes to overhead. 20% goes to employees. Okay? And then you get a 10% profit. And then the rest of the money, well, that gets distributed to the investors. Okay, great. Simple strategy, right? So, year one, we get 49 cents a share. Okay, great. Year two, we get 49 cents a share. Oh, what the fuck? Aren't you making money? What are you doing with my money? Year three, 49 cents. You're still not making any money. It's the exact same thing. And then we get up to here. And then you cut the dividends in half. It's like, what the hell? Okay, and then you cut the dividends in half again. So that means, hypothetically speaking, the company is losing money every year because a portion of the profits goes to the investors. And if that portion of the profit goes to the investors, gets smaller and smaller and smaller, well, that only go to tell me that they're not profitable. They're not as profitable as they were because every year you should. Now, I don't remember a time where inflation went backwards, okay, where everything got cheaper. Okay, so, a loaf of bread, 97 cents one year. Well, the next year it's 92 cents. And the next year after that, it's 87. It doesn't work that way. It always goes up and up and up. The company's making more money year after year after year. Those are the only companies I want. IEP doesn't work. Okay? How many shares of AEO did I buy? I have no idea. I don't even think I have AEO this week. I don't. Sorry, dude, I don't have AEO this week. I had AEO at the beginning of a couple weeks ago. NEO. Wait a second. I don't think NEO's on my list. NIO. Yeah. Okay. NEO is not on my list. There are no dividends for the selected time period. No dividends, no thank you. Quintus is trades. Quintus trades. Okay. Fatso Dan. I'm going to call you Fatso Dan. It rolls off the tongue easier. Sorry. XRP. Yeah, that's going to be a no also. XRP. Yeah. Sorry. That's going to be a no. There's no dividends. No dividends, no thank you. All right, Inobi. We already said no to IEP. Sorry about that. Fro. What the heck is Fro? Bradley Thomas. How are you doing today, Bradley Thomas? FRO. Frontline PLC. Okay. Hell no. Okay. Now, Bradley, explain to me in a manner in which I will understand. If a few years ago the dividend was $29, $9, $17, $12, $15, $10, then it starts dropping. $7.50, $12, $23, $17.50, $16.25, $7.50, $10, $170 in 08, $13, $15. Then what the hell happened here? $2.50, $1.25, 75, $1.25, $3.70, 50 cents? Bullshit. 10 cents? Come on. Why the hell are you what the hell are you thinking? Seriously, you gonna put your money into this? You do what you think is best for you. Me, I like consistent increased dividends. Or you can put it this way. I want a company that's gonna consistently make money year after year after year. Okay? So, if the dividend gets smaller and smaller and smaller, that means they're not as profitable year over year over year. Okay, there's 9,640 different companies to choose from. Why the hell would you pick something like this? Okay, look at the fundamentals. How profitable are they? How consistently profitable are they? Are they spending your money properly? Because you're taking your money and you're giving it to these dudes. Okay, now, a few years ago, look at that. $15 dividend. $29 dividend. $12, 23 dividend. Now we're at, where are we now? Now we're at 62 cents. That's a huge difference between $16 and $24. Yeah, hell no. No, thank you. Sorry. All right, Plantair, no. Sorry, bro. Plantair, we looked at it last night. No dividends, no thank you. It's a simple strategy, and you guys are just messing it up. Okay? You can do whatever you want. I'm only invested in companies that are consistently profitable. Okay? 9,640 companies. I only want the ones that are profitable. This, okay? If this is showing you a portion of the profits going back to the investors, it gets smaller, it goes up, down, up, down, up, down. They're doing something wrong, in my humble opinion. Okay? So if I'm doing something, think about this. If you're doing a job, right? And you're not getting better at your job, well, why the hell is the boss going to keep you around? Does it make sense? Okay, if you give your money to someone and you say, here you go, I trust you, I want you to do a good job, and I want you to get better every year. So, is this getting better? 50 cents, 15, 107, 70, 80, 30, 37. There's no consistency there whatsoever. There are other companies oops, that's not right. Hold on a second. Whoops. All right, let's take a look at this one right here, okay? 8 cents, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently, year after year after year, increasing. So if I'm giving my money to someone to invest and then turn a profit, well, I want that to grow every year, not go backwards. Okay? Okay, and I don't want to insult anyone. I don't. But if you're not, if you are investing without looking at the numbers, because numbers don't lie, people do. Okay, I don't trust anybody online. I don't. That's why I say don't trust. Don't listen to a damn word I say. Do your own research. Look at the numbers. Okay, look at the historical numbers. If the dividends are increasing year after year after year, all the companies getting more profitable. That's what it means. But if the numbers go up, down, well, that's not a very safe bet, in my humble opinion. Now, I didn't go to college, so I don't expect anyone to listen to me. Okay? But this is just my opinion. My opinion is, if they're not spending my money properly and they're not getting a consistent profit and increasing every year, if you're not getting better every year, well, then it's time for you to retire and go do something else. But to quote, was Old Man Potter, not with my money, you don't. Okay? FR Gap, really? What the hell is that? FRGAP. No dividends, no thank you. Mr. Rankin, all right? M ranking up. M ranking up. Think of it this way. No dividends, no thank you. Okay, the name of the show is Dividend Investing for Weekly Cash Flow. I don't know how you ended up here, but if you're thinking of something that I might like, well, I sure as shit don't like something that doesn't have dividends. What are you looking for with board members? Oh, well, board members. Rich, you're relatively new here. Okay, I like board members to be on the same wavelength as me. Okay, my main objective. Okay, main objective is a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Okay. Now, not only have I been doing this for the last 15 years, yeah, I found a handful of people that actually want to do it with me. Okay, and also, it's not the money thing for me. It's giving something back to the people because we, the people, have been screwed over long enough. And if I can offer a service to we, the people, because a lot of people, anywhere between 6,000 and 18,000 people come across my life every single day. See what I'm doing, see what I'm all about. Okay, now, I've been doing this since January. This live thing since January. I have videos of me doing this exact same thing going all the way back to 2012. So I've been doing this for a while, okay, and I've been sharing for a while. But you're only seeing it now because someone was stupid enough to put me in front of a camera and say, hey, Jim, go have at it. I'm at the point in my life where I'm retired, and I feel compelled to share with my fellow brothers and sisters, especially the little guys who've been screwed over all this time. But Richard, if you're serious about it, board members are required to have a buy-in. Yeah, and a buy-in that's going to be a little uncomfortable for most people. So I figure it's going to take me 2 years to get 13 people that are on the same wavelength and have the same mentality. Okay? So if you're serious about that, Rich, send me a number, I'll give you a buzz, and then we'll chat. Siri just merged with someone because Siri, hold on, let's go back. Whoops, let's go back here for a second. What? What does it mean that's not opening up? Damn. Okay. Siri, if you see Siri right here, I bought Siri in July at without $3.50. I bought Siri in July for $3.50. So you see where it is today? Siri is currently at $24 a share. Now, from what I was told, it merged with someone else. That's why she jumped up so much. Okay, Anobi, Altria. Who was talking about Siri? Oh yeah, so I'm not 100% sure what's going on with Siri. You know, because how can it go from, $3 and $4, all year long? Now it's up into the 20s. And it was overnight. Okay, they merged with someone, that's probably why they are right now. NSTL, isn't that Nestle? Oh, Nestle. NSTL. National Steel. NSTL. Can't find that symbol. Oh. NSTL Corporation planned for bankruptcy 2011. Yeah, that company doesn't exist anymore, dude. Okay? NSTL doesn't exist anymore. All right, next. Okay, nobody wants to take a look at Altria. Now, we looked at Altria earlier during the week. It's going to be a no only because I'm not ignoring you, okay? I'm not ignoring what you're saying, but I looked at Altria earlier during the week. It's at the high of the year, okay? Not far enough down. Let's go back to where were we? Okay? Look at Altria. Okay? A few months ago, we're down here at $40. Now we're way up here. That's a big movement. Okay? And this is not enough of a pullback yet. This thing has more to go. So it's going to be a no for a while. Dunkin' Donuts, isn't that D-N-K-N? Hold on a second. D-N-K-N. Yeah, I was right. Shit. And I don't usually... Yeah, Dunkin' Donuts has no dividends. I mean, no options. So that's going to be a no. Sorry. No for Dunkin' Donuts. XRP. Wait a second. Isn't XRP one of those Bitcoins? Yeah, that's going to be a no. Ooh, Picaris, Verizon. Oh, look at that. Sorry, dude. Verizon's going to be a no. Look at this. It's at the high of the year. Okay, I do not buy at the high of the year. Okay, but you know what I am going to do at Verizon? I'm going to put Verizon on the list for 3 weeks from today. Because I'm going to give it 3 weeks before she drops back down again to something realistic. Let's call it realistic. What can I buy for long? I have no idea what you're talking about there, Mr. Fatso. The only reason I say that is I don't tell people what to buy because I don't know anything at all about you. Okay, I have no idea how old you are. I have no idea how much money you have. I have no idea what your risk factors are. I have no idea what your knowledge is. I have no idea anything about you, so I can't tell you anything. Thoughts on Agree Realty Group, ADC. Andrew, how are you today? What was that one? ADC? ADC. Sorry, dude. ADC has monthly options. Now, if you don't know what a stock option is, well, they have a bunch of different ones. You have calls and puts, okay? Gives people the rights to buy, give people the rights to sell, kind of use it as an insurance policy. They use them for a whole bunch of different reasons. Now, they have weekly options and they have monthly options. Weekly options, 52 a year, okay? Every Friday, okay? Monthly options, once per month, only 12. Now, I didn't go to college. I admit that freely, and I am terribly sorry. However, I do know that if I'm collecting checks, I would prefer to get 52 rather than 12. Is trading a good business, and how would I invest in it? Favorite elf. Hey, you're back again. I remember that name. I'm good with names. A Maverick 321. All right, think of it this way. No inventory, no boss, no overhead, no employees. There's a whole bunch of no's. Okay, it's like an ideal business. And if you do it right, there's so many things you can do as a trader. Okay? You can trade commodities, you can trade futures, you can trade Forex, you can trade crypto, you can trade stocks, you can trade options. There's a lot of stuff you can do. Pick one and get really good at it. Okay, there's way too much information out there. You will be swamped for decades trying to read through all of it. I remember when I submitted a book to Amazon. Okay, you submit a book to Amazon and they read through it, and they got a letter back from them, and they said, is this your own information? Because it sounds like you're plagiarizing someone. And I wrote back to him. I said, all right, look at it this way. There's X amount of words in the English language. The stock market has been around for 420 years. How much can you say about a subject over a 400-year period? Especially when you have people writing books day after day after day. I've written 14 of them so far, and 13 of them so far, okay? And they said, well, you're plagiarizing this. I said, well, you can't say the stock market without using the word stock and market. There's a lot of stuff in the stock market have to do with investing in the stock market, but you're not repeating what somebody else said 10 years ago, 15 years ago, 20 years ago, 50 years ago, 100 years ago, 200 years ago. Yeah. It's been around for 420 years. There's not a lot you can say that hasn't already been said. All right, so let's keep on going. So that answers the question. Is it a good business? Ask yourself a couple of questions. You know, can I do it? Is it right for me? What trading strategy do I want to look at? How much time and effort do I want to put into it? How much money do I have available? And what kind of rate of return can I get on a consistent, safe basis? A lot of questions there, favorite elf. Maverick. Fine. Lucky Larry, how are you doing? Thanks, Rude. I'm trying. Okay, hold on. Where was I? All right, last one. All right. Wow, I missed all these questions. All right. Do you have a dollar amount you try to invest per account each week? 98%. That's my number. 98% of each account. This account here, I believe, has 160,000 in it at the moment. Okay? I invest 98% of that every single week. I keep back 2 to 5%. That's it. In case I have to do something. What else am I going to do with it? I'm sure not going to leave it into cash. We've seen what's happened to cash over the last couple of years. Okay, Anobi, you already asked me about Altria. M-O, no. Okay, oh, no. Pepsi, let's take a look at Pepsi. P-E-P. Who just asked me about Comcast? Dwayne, we looked at Comcast about 15 minutes ago. Sorry. Comcast, the numbers just don't work this week. I love Comcast. Really, I do. I bought Comcast twice this year already. Okay, this current rollover. Okay, Comcast has its dividend the first week of every quarter. In two weeks, well, we're going into the fourth quarter in 2 weeks. Okay, the beginning of October is the beginning of the fourth quarter. And the beginning of the quarter is when I buy Comcast. But we looked at the numbers for Comcast, and it just so happens to be a no. All right, we're looking at Pepsi. First thing I always want to look at, where's the high? Where's the low? Where was it a year ago? Where is it now, and what direction is it going? It's currently sitting at 177.36. So the closest one we're going to look at is the 177.50s, and it's going for 147 to 158. It's going to be a no only because it's not 1%. Now, I've been saying over and over again, I think I said 5 times already, there's 9,640 different stocks to choose from. Pepsi is on my list. Pepsi very rarely gives me over 1%. But there's a whole bunch of other companies that will give me 1%. So it's basically going to be a no for this week for Pepsi. Now I got a couple questions on YouTube. Let's take a look. Since then I got scared going back. Okay. I lost 40,000 trading MT4 stocks. I have no idea what MT4 stocks are. Let's go back to that. What did he say? Good evening. Okay. Odom Gaia. Okay. All right, so let's keep going with some of these questions. Here we go. ELTP. Landon. Usually, when I say what the hell is that? ELTP. It's usually going to be a no. Okay? ELTP. No options. Okay, no options. No thank you. Cornelius, do you use teeth? Yes, I do. All right, someone asked M.O. Altria. Yes, I looked at Altria twice tonight, and both times it was a no. Will you do Forex Fury? No, I will not. One last. How much different is it versus just buying a 20-year dividend stock and holding? Holy shit. Okay. Maverick, give me a good stock that you liked. Oh, let's take a look at Microsoft, MSFT. Okay. Microsoft is currently at $430. $430. Let's go over to Yahoo Finance, MSFT. Let's put in the yield. Holy crap. Okay. I don't even know if you like Microsoft. But here's the thing: Microsoft is paying 0.7% per year. That's not even 1%. All right. Now I'm showing you a way. All right. Down Maya. I mean, I trade gold, oil, bitcoins, and currency. You're definitely in the wrong place, dude. I don't do any of those. Sorry. This is slow. This is boring. This is methodical, and this is monotonous. Okay? I'm only looking for 1% a week. I'm not looking to buy something and have it going up high. No, sorry, it's not. I'm looking for cash flow. I'm not looking for appreciation. Sorry, you're definitely in the wrong place. And I hate telling people you're in the wrong place, but you kind of are. Maverick. I don't know how to answer that question, Maverick. You know, because originally, people would buy stocks and hold on to them for decades, which is what you're talking about. And there's nothing wrong with that philosophy. Okay? I don't have it in me to put all my money into a stock, wait 20 years before I get out. Because I need money to pay my bills. I'm retired. Okay, when you retire, you'll get there someday. You have to have a monthly or a weekly flow of cash coming in to help pay the bills. Believe it or not, as a human being, we're the only species on this planet that's got to pay to live. That's it. There's very few of us that can go out in the wild and be okay. I could, wouldn't bother me a bit. I could live off the land, but I choose to live in a house. I choose to have this. I choose to have that. That costs money. Well, where's that money going to come from? Well, the money got to come from investments. Okay? So if you're thinking of buying something and holding on to it for 20 years, more power to you. You're definitely in the wrong place. Oh, I think I made a very big mistake trading those stocks. Okay, I have no idea what stocks you're talking about, but from some of the conversation that you were having here, you're definitely in the wrong place, dude. Okay? That's not what we do here. We're looking for simple, safe, predictable, and consistent 1% per week. Now, 1% per week is not a lot of money, but it is over 50% per year. So if you have a $50,000 account, well, you're making 25 grand. If you have a $100,000 account, well, you're making 50 grand. If you got a $200,000 account, well, you're making 100 grand a year. So wherever you are, whatever nest egg you got, divide that in half, and that's possibly what your rate of return for the year would be. Okay? ELTP, we looked at that when it's no. Landon, I already said no to ELTP. Sorry. Bristol Myers Squibb is a beast. Mario, I love BMY. Let's take a look at it. BMY. All right, here we go. Bristol Myers Squibb. Last year, or a little over 60 was the high. The bottom is down here. It looks like 38. And we're currently at 49. See, she drops, goes up, drops, goes up, drops, goes up. Here we are right here at 49. Well, currently, the 49s are going for 99 cents. Well, that's freaking awesome. The 49.50s are going for 72 cents. Well, that's awesome also. Look at these premiums. I like premiums that look like that. Well, I like Bristol Myers Squibb. They've been around for over 100 years. And they are a dividend king. Dividend king means that they have increased their dividends. That's the share to the share. That's the profit to the shareholders. Okay, we get a portion of the profits. They've increased their profits to the shareholders for more than 5 consistent decades. That means every single year, higher and higher and higher money. Back to me and back to you if you decide to buy Bristol Myers Squibb. Okay, so a year ago, we're at 60.74. Bottomed out at 39, and that was in July. Well, look where we are right now, the last 30 days. Here we go. Last 30 days, and that is an awesome looking chart. Uh-oh, another question. Oh, I'll try to join your lecture often. I'm here every night, dude. Every single night, 9 p.m. All right, check a look at this. This is like almost beautiful. Look at this. 30 days ago, she goes up, down, up, down. Well, where do you think it's going now? It's going up. That's all stocks do. They go up, they go down, up, down. And if you can find one that looks as pretty as this, up, down, up, down, up, down, well, you know, here's the bottom here. Now she's going back up. All right. All right, so I like Bristol Myers Squibb. It is giving me the 1%. I can't read that name, dude. Sorry. But you want to take a look at Pepsi? We already looked at Pepsi, and Pepsi's not giving a good number this week. Sorry. Maverick, he's going for weekly cash flow, not capital appreciation. Thanks, rude dude. Bristol Myers Squibb pays a good dividend, you're right, and makes money. Well, Mario, that's why it's a yes. Okay, I'm not arguing with you. I'm saying yes to Bristol Myers Squibb. Okay, she's been around for over 100 years. Okay, she's increased the dividends for more than 5 decades. Decades! That's 50 years. Some of you people here haven't even been alive that long. 50 years of increased dividends. Current price right now, $49.13. The $49.50 is going for 72. That's over 1.5%. The 49s are going for 99. That's close to 2%. Hey, Colton's here. We can start the party. Woohoo! Colton's in the house. All right, let's keep on going. ADSK, Fab, really? I'm trying to understand how much weekly versus the growth side, how they compare. Well, Maverick, the way you compare it is, look at this. It was created for a 9-year-old little girl. As a matter of fact, I haven't done this yet, so let's do it. Hey, Kuna, how are you? I haven't seen you the past couple of days. So we go back here.
Hi, I'm JC, and as you being part of my internet website club thingy, which my dad doesn't like me calling that, but I do. Being part of that, you're going to be getting weekly lists of stocks and all
Days in the month of January. So 20 days in February. There's over 21 days in the month of March. Hey, that's me 12 years ago. That was my daughter. I created this trading strategy for my 9-year-old daughter when she was 9. Okay, this is 12 years ago when she was 11, because for the first couple of years we didn't do any videos. But in 2012, what's her name? You don't really need to know that. But anyway, but 12 years ago, we were introduced to YouTube, so we started doing videos on YouTube. I'm good, thanks, hope you are too. I'm getting better. So the thing is, I even forget where we're going with this one. Thanks, trying to understand growth. Okay, so I forget where I'm even going with this one. Oh, so the trading strategy was created for my 9-year-old daughter when she was 9. Okay? She said, Daddy, can you teach me to do what you're doing? Yep, 12 years ago. Can you teach me what you are doing? So it had to be simple. Okay, 9-year-old little girl. She wasn't a Mensa student. She wasn't on the honor roll math class or anything like that. Just a regular, ordinary, everyday little girl. That's it. Regular girl. Had to be simple, safe, predictable, consistent, and no way that she could lose. Because at 9 years old, what's going to happen if she loses? She's going to cry. I'm going to feel like shit. Mama's going to get involved. I'm stuck on the couch. It's not going to be a pretty sight. So I had to come up with some simple rules. Rule number 1, never buy something you do not understand. Okay, if you do not want to hold on to it for the rest of your life, don't buy it. It has to be something you really like and you really understand it. Okay, that's number 1. Number 2, never sell for a loss. Number 3, and this is an important one, and some of you guys just glance over it. Rule number 3, make sure the company is consistently profitable. You have a couple of choices here. You can actually go in and look at 9,640 different companies, what do you call it, fundamentals, okay? Looking at all the quarterly reports, all the annual, you can look at all that crap, or you can go straight to the dividends. Because the dividend is a portion of the profit already in the mix, which is already in the, what do you call it? I'd like to say rule book, but that's not the name of it. There's a certain name. I forget the exact name of it, but it's a cool name. When the company consistently works in to the plan, the business plan, okay, the business plan, a portion of the profits goes back to the investors. So if that number gets higher and higher and higher year after year after year, well, the company must be doing something right and they must be consistently profitable. Because if they're not consistently profitable, well, how can they consistently increase the payments to the shareholders? It's just logic, common sense. If you're consistently profitable, great, that's why I want to buy. Okay, that's rule number 3. Make sure the company's consistently profitable. I personally like 20 years of increased dividends. Okay, 20 years of increased dividends, well, there's only 300 companies that do that. 300 out of 9,642. Only 300. Not that difficult to track 300. Rule number 4, and this is another big one. Make sure the company has weekly options. I want a weekly cash flow. I don't want monthly cash flow. I want weekly cash flow because I ran through the numbers. Monthly cash flow does not allow me to pay my bills, which means I have to go back to work. I got to pay more taxes. I have to do, no thank you. I've been working since 1973. I've been retired since November. I haven't even been retired a year yet. I'm kind of having fun. But weekly options because I want weekly cash flow. And 5, make sure the numbers work. Now, the numbers, what do I mean by that? Well, what do I mean by that is what is the current stock price? Okay, this is what I can buy it for, the current stock price. What can I sell it to someone else for? Well, if it's at 49.13, I can sell the 49s, or I can sell the 49.50s. I can sell the 48.50s. It's math. 1 plus 1 is going to equal 2 no matter what language you come from. Okay? Okay, no matter what galaxy you come from, 1 and 1 is 2. It's simple. It's actually that simple. So if I'm buying it for this price, selling a covered call for this price, and I'm collecting this right here, this is my profit. All right? And that profit is more than 1%. Well, great. Then I want to take a look at the chart. Where's the high? Where's the low? Where is it currently going? Well, she went up, down, up, down. Well, now she's going back up again. Okay? Now, a 9-year-old, yeah, I get it. All right, up, down, up, down, up. It's actually that simple. Can you explain how this is not gambling? How can I explain this is not gambling? All right, you ready for this? I'm going to need a little bit of, what do you call it? Visuals. I need a little bit of visuals for this one. Okay. Now, whoops, I want to look at this right here. All right, you ready? Need a little bit of visuals to explain how this is not gambling. Okay? Now, number 1, most of these companies you probably heard of. So let's go through a few of them. Paramount, Mendeley's, U.S. Bank, Bristol Myers Squibb, we were just talking about this a minute ago, Globe Life, Boyd Gaming, Coca-Cola, Bank of America, General Motors, Hewlett-Packard, Occidental Petroleum. And we also have Procter & Gamble, we have Philip Morris, we have Colgate-Palmolive, Ford, General Motors, Bank of America, Wells Fargo. Most of these companies are over 100 years old. If you can imagine a world where there's no Coca-Cola available, I have no idea what world you're in. Okay? They've been making Coca-Cola for 140 years. I don't see Coca-Cola going out of business. Ford Motor Company's been around for 100 years. You can go to almost any continent in the United States and you will find a Ford car. You will. Okay? Now, there's certain companies that have been around for a while. They're not going anywhere. General Electric, well, they've been in business for over 100 years. Consolidated Edison, they've been in business for over 200 years, offering the same product year after year after year. So it's not gambling when you buy a portion of the company. So when you buy a stock, you actually own a part of the company. So if you buy, or if I buy, some General Motors. Now, General Motors has been around for 100 years. Okay? I own part of the company. Okay? So when I own part of the company, I am entitled to a portion of their profits. That's why I like dividend stocks. I don't do non-dividend stocks. To me, it just doesn't make sense. Well, not at this point in my life anyway, because I'm not looking for capital appreciation. I'm looking for cash flow. Okay, so if I own a portion of General Motors, McDonald's, AT&T, General Electric, Ford, Procter & Gamble, Comcast, all these companies that are over, they've been around for a while. I grew up in the 60s, 70s, and 80s. So if it is a name brand company, it's a company I've heard of, I don't see the risk. So I don't see where you think it would be gambling. So if I buy Occidental Petroleum or Hewlett Packard, I own a portion of that company. And that company consistently increases its profits to the shareholders every single year. Consistently. Okay, there are some companies that have been increased. GPC, Genuine Parts Corporation. They have increased their payments to their shareholders for 7 decades. That's 70 years. That's longer than I've been alive. Every single year, they pay higher and higher dividends to their shareholders. How can you possibly even think that's gambling? Okay? Gambling is when you say, all right, I think this is going to happen, and something. I don't want to get into that conversation. I like simple, safe, predictable, consistent. 1% per week. Okay? I don't get into companies I don't know. I don't get into companies that don't make any sense. Okay, let me keep on going. All right, Maverick. Thanks, Weird. I'm trying to understand how much weekly versus growth side, how they compare. All right, I don't do growth at all. Really, I don't. I'm looking for cash flow. At this point in my life, I'm 60 years old. I'm retired. I have no desire whatsoever to go back into the workforce. I've been working. You're 13. Why 13? I am superstitious. Why 13? Oh, I've written 13 books? Well, because I haven't done book number 14 yet. That's all that means. ADSK. Didn't we already take a look at ADSK? Hold on a second. ADSK. Autodesk. 263. Okay. Okay, how often have they paid the dividends? ADSK. No dividends at all. Why would I invest in a company that doesn't have dividends? I mean, think about it. Fab. Okay, the name of the channel or the name of the show or whatever you want to call it, it's called Dividend Stock Talk. If the company doesn't have dividends, why am I looking at it? Okay? Adobe. Ooh, Adobe. Yeah, Rich Bruno, I got that. They did a 10-to-1 reverse split. I got that. No, Siri jumped because reverse split. Yeah, I know that. Don't believe everyone on the internet. I don't believe anyone on the internet. I can't read this name, so I can't really call you out by name. But a reverse split is if you have 100 shares, burn thy priest. So you consider it not gambling because the company's over 100 years old. My counter argument is that as many things have lasted over 100 years, they're also gone today. Well, you're absolutely right. That's true. I'm not denying the fact that there are companies. There's one company been in business for over 300 years, and earlier, sometime last year, they actually closed their doors. So sometimes things just come and go, and they're done and gone. Well, yeah, that's absolutely right. And that's part of everything. You can say that about anything on this planet. Nothing is permanent. Okay? Even the pyramids, even the what do you call it, the sphinxes, are thousands and thousands of years old. Well, they're starting to deteriorate. They're starting to fall apart. Okay? Göbekli Tepe has been around for over 10,000 years. Where's everything else that was there? That can't be the only thing that was on the planet 10,000 years ago. There's got to be something else. So yeah, so everything has a time. There's a time and place for everything under heaven. It's right in the Bible. Okay, so you start to do that preachy crap to me. Just don't do it. You know, there's a time and place for everything. Okay, eventually, okay, and you're probably right about this, eventually they will stop making Coca-Cola. I don't see it in my lifetime. Okay? All right. Don't believe everything. So anyway, as I was saying, I was talking about reverse splits. Okay, so a reverse split. So let's say you had 100 shares. Okay, hold on a second. Burnley Priest. Just because it's over 100 years doesn't mean it's a good thing, blah, blah, blah. Whatever. Their information, thank you. Okay. I'm not going to have a theological argument with you. I really have no desire to do that. You're very informational. Yeah, thank you. You're welcome. Okay, I'm not going to have a theological argument with you because you're not going to win. It's just that plain and simple. So it's gambling, just long-term gambling. Oh, my goodness. You want to be that way, everything is gambling. You stay in bed, you're taking the chance of a tree falling on your house and you getting crushed. You get out of bed, well, you take the chance of falling on your ass, breaking a hip, and injuring yourself. You walk out your door, you're having a chance of a freak accident and something killing you. You stay in your house, you have the risk of a tornado coming and taking your house away. There is risk and gambling in everything you do. Even breathing. Breathing, you have no idea of what's floating around in the air, yet you're risking and you're gambling that you're breathing in clean air, not something toxic. So please, don't give me that bullshit. I have no desire for it. If you're not here to add to the conversation, keep your opinions to yourself. It's that simple. All right, so back to the stock split. A reverse stock split. If you have 100 shares, then you do a 10-to-1 split. You get 1 share for every 10 that you own. Thank you. We are going to continue the classes. Okay, so a regular stock split, it's usually 10 to 1, where you get 10 shares for every 1 that you own. But a reverse split, you get 1 share for every 10 you own. So on a regular stock split, a 10 to 1 stock split, if you have 100 shares, you now have 1,000. A reverse split, if you have 100 shares, you now have 10. Okay? It's not always that glamorous. The same amount of money, but it's a reverse split. Yeah, I got that one. Adobe. Ooh, let's take a look at Adobe. I don't even think Adobe's on my list. There it is right there. Adobe. ADB. Or ADBE. Okay, now usually, who said Adobe? All right, stop. Usually, I don't do stocks over 250 bucks. Okay, so however much money you think I have, I do not have enough money to buy, 1,000 shares at $536 a share. So you don't want to have a reverse split, right? That's got nothing to do with it. It's got nothing to do with it whatsoever. A reverse stock split, it's got nothing to do with it at all. Okay, so if you have 1,000 shares at 500 bucks, and they do a reverse split, well, now you're going to have 100 shares, and it's still going to be the same value. You're not losing any value, just that the stock price changes, but the value stays the same. MDT. Medtronics, is that right? MDT. Medtronics, okay, I was right. All right, so Medtronics is currently at $90. Check this out. Here's a high, Here's your low. Here's where it was. Here's where it is. I'm going to say no to Medtronics for this week. Okay? I still can't read that name. I have no idea what it means. Okay? I'm saying no to Medtronics this week because it's at the all-time high. Okay? It's in this area here. I would put it on the list for what, 3 weeks from today? Because I'd like it to come down. Because you make your money in the stock market buying low and selling high. Okay? Buying low, selling high. Not buying high and waiting for it to go higher. Yeah, I don't do that. Okay, it is eventually, look, see, it came down, it came down, it went up, 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 so on and so forth. It does the same thing over and over and over again. Now, if there's a company I like MDT, I do. So right now it's here. I'm going to wait for it to come down, find a new bottom after this profit taking. Because if you bought it down here, 76, 78, or even 80, well, now it's at 90. Okay, so it goes from 76 to 90. That's $24. Wait a minute, that's a $14 increase. Okay, $14 on a $70 stock, that's almost 20%. Well, if she goes up here 20%, well, yeah, I'm going to want to take some profit because it's not a profit until you take it. Okay? Nobody ever went broke taking profits. So I like MDT. However, I'd like to wait for it to come down a little bit. So I'm going to put MDT down for 3 weeks. And, 3 weeks, we're going to look at it again. We'll probably look at it in 2 weeks, but in 3 weeks, it'll probably be a better choice for buying. 3 weeks, MDT. 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 Alrighty. Wooten, we already took a look at Comcast earlier. Alex, I looked at O earlier today. It was a no earlier. It's going to be a no again. So always buy low. Well, Virgil, think of it this way. If you make your money buying low and selling high, well, of course. If you find a stock you like, great. Keep your eye on it. What does it do? Look, it goes up, it comes down, up, down, up, down, up, down, up, down. So when it goes up, okay, you have a million. All right, look, wait a second. It's not on there. Oh, wait a minute. I can know where to find it. Here we go. All right. See this little chart down here? These blue lines down here? That represents volume. How many shares are traded on a daily basis. So this particular company right here, which is Medtronics, it has an average of 7 million shares traded every single day. Intel, Dragon likes to take a look at Intel. We'll take a look at Intel in a little bit. Hold on a second. 7 million shares are traded every single day. Okay? It goes up, it goes down. It goes up, it goes down. You and me are not the only investors here. Okay? When it comes down, great. Buy it there. When it goes up, figure out what size profit you want. That's a big one. Me, it's 1% a week. I get 1% almost every single week. I'm not going to say I do it every single week because that just wouldn't be true. Okay, so now my trades are all visible online. Okay? All right, look at here. 1.5%, 2.86%. Well, look at this one right here. Week 25. Negative 0.15. I've only lost 1 week. That's it. We're in week number 34, 35, something like that. And I've only lost 1 week. That's it. 2%, 1.6, 0.6. Right, 0.6, 1.8, 0.6, 8.5, 8.5, 1.2, 4.7, 0.71, 8.5, 1.2, 4.08, 2. So on and so forth. All the trades are right there. You can take a look at them. Do I make 1% every week? No, I don't. But do I average over 1% every week? Yes, I do. Okay. Okay, stop, Upstart, never heard of it. Upstart Holdings. Okay, 3802. Upstart. What was that ticker symbol? UPST. 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 Let's see how well UPST has paid out its dividends. All right, dividends only. Who comes this? All right, stop. You want to look at Adobe? Adobe's going to be a no. Upstart, it's going to be a no. There are no dividends in the selected time frame. No dividends, no thank you. All right, Alex, we already looked at O. O is a no. Okay, Wooten, we already looked at Comcast. Comcast, I love Comcast, I really do. However, this week, Comcast does not look that great. All right, Inobi, you want to take a look at Fifth Third Bank. FITB. FITB. Okay, FITB, Fifth Third Bank, it's a monthly, it's at the high, no thank you. Okay, buy low, sell high. Okay, up, down, up, down, up, down. That's all they do. Don't make it more complicated than it needs to be. Blitz and spray. Hopefully you're better with names than you can see. Okay, dude, I appreciate that. Okay, you get stuck with a nail. I got a nail in my eye, so that's why it doesn't look that way. Okay, so I got one eye to look with, and yeah, it's late at night, and you know it's one of those things. I'm a little self-conscious about my eyes, but thank you. The Django, that was a cool movie. What's the benefit of a dividend compared to simply selling some stock? Desk head, I think you're missing the whole purpose of the trading strategy itself. The dividend is a portion of the profits given back to the investors. So you have two different kinds of companies. Okay? You have a company that will share its profits with the investors. That's you and me. Okay? When we buy a stock, we are an investor. We are a shareholder. We are entitled to a portion of the profits. That was rude. Yes, Virgil, it was rude. But it is what it is. Not everybody knows my story, okay? What was I saying? Oh, there's two different kinds of companies. One company will get the profits and they'll share it with the investors. That's you and me. The other companies, they take all the profits, they put them back into the company for capital growth. If you're looking for capital growth, okay, if you're looking for capital growth, you're in the wrong place. You're basically wasting your time. I'm looking for cash flow. That is it. Cash flow. That is it. Simple, safe, predictable, 1% per week. That's over 50% per year. If you can find another trading strategy that is simple, safe, predictable, and consistent, fine, do it. But remember, I get about 50% per year. I've been getting about 50% per year for the past 15 years. Mario, BMS is a good one. SPG. All right, SPG. What is that, spaghetti? Simon Properties. No, it's a monthly. No, thank you. BMS. BMS. Bemis. No options. No. Sony. We took a look at Sony yesterday. Sony. Look at Sony. I don't like all the gaps. Look at all the gaps. All the spaces in between. All right, so here's our high. Here's our low. Here's where it was a year ago. Here's where it is now. Let's take a look at the last 30 days. Because the last 30 days gives me an idea what direction it's going. Okay. Okay. 30 days ago, we're sitting at 87. Okay? We jumped up to 97.60. Okay? That's the high right there. That was what date was that? The 30th, August 30th. From there, she drops down. Here's the new bottom right here. 3 days to the, 4 days to the upside. 1, 2, 3, 4, 5 days to the upside. We're at 93.44. I can buy it at the 94s, between 90 cents and $1. So you're barely getting your 1%. But the question you need to ask yourself is, do you like Sony? Now, let's take a quick look. What does Sony normally do this time of year? Well, for that, we need what is called Dragon. What does gaps in Sony mean? Oh, yeah, I haven't forgot. Actually, I did forget about the Intel. Let me write it down. INTC. You get to a certain point in life when you forget things, so you write them down, and then sometimes you forget to write things down. And then there's sometimes where you write things down, but then you forget where you put the book in which you wrote it down in. Okay, that's where I'm at. Okay, so this chart here is called a seasonality chart. All the way over to the left, January 1st. All the way over to the right, December 31st. The blue line represents the movement of the stock for this year. This blue dot right here represents Friday, which was the last traded day. The red line represents 10-year average. Okay, so that takes 2014, 2015, 2016, 2017, 2018, 2019, so on and so forth, for 10 years. This is the average movement. I want to take a look at this area right here. Well, it looks like it's going to go down a little bit, but look at right there. Okay, right here, the end of October to the beginning of November, that thing shoots up. And it wouldn't be that prominent if it didn't do it every single year. So I like that, but that's not until the end of October. So I'm going to put it, okay, how many weeks is that? 7 weeks. So this is going to be the only entry for 7 weeks from today. That's 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks. Here we go. 7 weeks, I'm going to put down Sony. Sony, 7 weeks, we're going to take a back look at Sony again because I like that movement right there. If that thing consistently jumps up every year, right there, I want to be part of it. All right. So let's get back to Sony. Where were we? Okay, so for the next couple of weeks with Sony, all right, it's really not that difficult to see it. Okay, the blue dot represents Friday. Okay, here we are right here. The average, it moves to the downside this time of year. Okay, what do the gaps mean? We're going to go to that right now. What next? All right. All right. See the gaps? There's a gap here, a gap here, a gap here, a gap here, a gap a gap here, a gap here, a gap here, a gap here, a gap here. So what does it mean? Well, it means that, you know, it just jumped up overnight. Which means, I hate it when it jumps up overnight, especially when you're in the wrong position, okay? Because when we buy or sell, we open ourselves up to risk. Somebody talked about that earlier. Risk. You can't get away from it. So I don't like gap ups because you never know when they're going to come. I like consistent movement. Here, this is a consistent movement. Okay? Right here is a consistent movement. But nothing you can do about that. Let's keep on going. SPG. We already said no to SPG. Wow, I missed all these questions. Oh boy. All right, I'm not ignoring you guys. You got to remember, I got 6 cameras going. 1, 2, 3, 4, 5, and 6. So I get questions coming from all different directions, and I can't get to them all as soon as you give them to me. Your residents, how are you today? Just crossed the border into the U.S. All right, Mateo, I have no idea what that means. Snows a no, we already did that one. My thoughts on Riven, they haven't been around for 20 years yet. Intel, we're going to take a look at that one right now. INTC. Well, let's try it one more time. INTC. Here we go. Intel. Here's our high. Here's our low. Here's where we were. Here's where we are. Look at this big gap here. I like gaps like this. Okay? When it gaps down. Now, I didn't have any at that time. Wow. That tea is not as good as my other tea. Philly Pete. Intel's a great stock. That low right now. Yep, you're right. Just raised their dividend. Cool beans. SMCI. Uh-oh. I missed a whole bunch of questions. SPG. BMS, MO's a no, SPG. What the heck is SPG? We're going to get to that in a second. Hold on. We'll take a look at Intel. High, low, is, what direction it's going. It's currently at 1966, the 1985. The closest one is going to be the 20, 33 cents a share. That's over 1.5%. Okay, so there's a couple of simple questions. Does it make sense? That's one question. Number two is it right for me? Do I like Intel at this price? Well, what does Intel usually do this time of year? Well, last 30 days, okay, you really can't miss this one. Look, 30 days ago, we're here at 1950. Shoots up, pulls back, shoots up, pulls back. Now it's going to the upside. It's really that clear. Up, down, up, down, up. Okay? Okay, what does she usually do this time of year? Seasonality, what what does that look like? Okay, here we are right here. Looks like she's going to go down a little bit, but look at the fourth quarter. Fourth quarter, she goes to the upside. So right about now, yeah, right about now she has a very slight downturn for the next week and a half, but then she turns around and goes right back up again. If you like Intel at 20 bucks, because that's where she's currently at this moment in time. All right. Next on the list, SPG. What the heck is SPG? That's spaghetti. Didn't we just take a look at that one? SPG. Yeah, that's a no. Okay, SPG, monthly options. Okay, monthly options means I can only do it once a month or 12 times a year. Virgil. I just did MO. That's going to be a no. Secretariat, how are you? Did I do Macy's yet? Macy's premiums go. They are literally disappearing. Uh-oh. Macy's is my favorite. Don't be saying that. Okay? Macy's. Uh-oh. All right. Here's our high. Here's our low. This is where it was. This is where it is. We got 3 days to the upside over here in the $15 area. Currently, the 15s are going for 30 cents. That's almost 2%. What do you mean the dividends are disappearing? I mean, the premiums are disappearing. Okay, last 30 days. $30 days ago, we're at 16. We jump up to 18. Big drop down. We have our 30-day bottom on Wednesday, Thursday, and Friday, 2 days to the upside. I love a 30-day bottom with 2 days to the upside. Okay, Macy's is like perfect for me Monday. All right, well, let's take a gander at it. 15, the 15s are going for 30 cents. That is a 2% trade. I love a 2% trade. Now, Macy's is one of those ones I buy every single quarter. How can I start trading? Any resources I can leverage to learn? All right, Alino, you can look at, there's so many different trading strategies and so many different things you could do. You've got to ask yourself some very hard questions. What do I know? What do I want to do? What's my risk factor? How much time and effort can I commit to this? Okay, so average people, they just buy the stock and leave it alone. Just hold on to it for decades. Okay, fine. This trading, it's like 10 to 15 minutes every single trading day. Okay? I don't mind because I get 1% every week. And the 1% I get every week, it's only about an hour a week. So I spend an hour a week and I make a nice fat paycheck for an hour a week. But that's me. All right, Mario, we looked at BMS. We already said it's a no. Secretariat, I don't know what you're talking about. It's offering a 2% premium for this week for Macy's. What are we talking about? We're talking about investing for weekly cash flow. BMS is a no. We looked at SoFi. I don't like SoFi. Snow's a no. BMS, we already said no. SMCI, that's a no. Just raised their dividends. Cool beans. Still a no. Intel, great stock, the low price. Yep, we already looked at Intel. Rivian. Rivian doesn't have 20 years of increased dividends. Snow doesn't have any dividends at all, I don't think. Just crossed the border into the USA. Good for you. Your residents, how are you doing? Okay, Anobi, we already looked at Fifth Third Bank. Intel, we already looked at that one. Video stalled for anyone else? I don't know. Magist. Hi, I'm from Moscow. Kagdala. Pожалуйста. How are you doing? What city are you from? I'm from the Boston area, but right now I'm in St. Petersburg. Bristol Myers Squibb does make a lot of money. AbbVie, great company. It's been around for over 100 years. Dividend king, increasing their dividends. Video is fine here. Way to go, Virgil. All right, so let's take a look at AbbVie. Now, we already looked at Adobe. Okay. Upstart, we already looked at Upstart. Both of them were no. Sorry. AbbVie, ABBV, AbbVie. Okay, AbbVie is going to be a no for this week. Tampa, Florida. Oh, dude, we should do lunch sometime. I'm right in St. Pete. St. Pete, it's nice here. All right, AbbVie. Here's our high, here's our low, here's where it was, here's where it is, here's the direction it's going. Look at this. 155, she's currently at, hit the high at 200. Well, that's a big friggin' jump. That's a 30% jump within 1, 2, 3, 4 months. Okay, there's gonna be profit taking. Way too many profits for me. So AbbVie, although I like the company, I'm gonna pass on it this week, but I'm gonna write it down for 3 weeks. I think it's gonna take 3 weeks to get down to this area where it's more, where it makes more sense for me. So 3 weeks, AbbVie. It's already written down. That sounds nice. All right, next. Bristol Myers Squibb, we already looked at that one. Adobe, Upstart, we looked at those. SPG, we already looked at that. Bristol Myers Squibb looked at that. Fitbit, we already looked at that one. You do covered calls on your stocks each week, every single week. Okay, I haven't missed a single week for the last 20 years. All right, it's just part of my morning ritual. New here, are you strictly options? No, I buy stocks and I sell options. All right, Neil, can you go over slowly how you add things into the calendar? Of course. All right. Let's get rid of this. First thing you want to do is you want to come, see where it says watch list over here in the top left corner? Okay, watch list. Okay, I want to come over to the very next tab over. Right? Slide all the way down and it says create watch list. Click on that. Give your watch list a name. Insert name here. Whoops, wait a second. Insert name here. Okay? Then I want to import my symbols or add symbols. See? I can add a symbol. T, enter. There's AT&T. Add a symbol. M, Macy's. Add a symbol. DE, John Deere. Add a symbol. So on and so forth. Okay? Once you do that, you hit the save button. Okay? Hit the save button. Get out of that. Come on over to the calendar. Now, up here in the top left corner, see that little sunshine right there? You click on that sunshine, and you come down to personal, because it's part of my personal list. Okay, where's that personal list I just did? Right, oops, where was it? Right there, here it is. And there it is, John Deere, Macy's, and the other one. The one I just did just now. All right, that's how you do it. Get out of that. Get out of that. Okay, you were talking about how you started this in 2012. No. Okay. What I said about 2012 was that is when I started uploading videos to YouTube in 2012. I taught my daughter how to do this in 2008. The budget. I have no idea what the budget means. Vlad, I used that motto with Walgreens, but I just gave up and sold at a loss. All right, Vlad, I can't tell people what to do. I actually bought Walgreens. I still own it. I have Walgreens in 4 different accounts. And yeah, I have it at different numbers. Peter, AGNC. Let's take a look at AGNC. AGNC. All right, AGNC is going to be a no for this week, but it doesn't mean it's a no consistently. Here's our high. Here's our low. Here's where it was a year ago. Here's where it is now. Do you see where the high is? It's like 1060 or like 1035. It's not a lot of space to go. So where are you going to get your profit from? I don't like buying at a high and waiting for it to go higher to a place where it's never been before. It just doesn't make sense. Because if you look at it, she goes up, she pulls back, up, pulls back, up, pulls back, up, pulls back, up, pulls back. That's all it does. Well, right now she's going to the upside. Well, I will wait for it to pull back before I jump in. Because I like the stock, I do. But it doesn't work for me this week. So I'm going to put it on the list for 2 weeks, because if you take a good look, okay, take a good look at the last 30 days. 30 days ago, we're at 995. Okay, she jumped up to what is that? 1040, pulls back, goes up, pulls back, goes up. This gap right here, that gap is going to fill. This baby's going to drop, more than likely. So I'm going to give it about 2 weeks before it comes back down to some kind of realistic pricing. AGNC. So we'll look at it again. AGNC in 2 weeks. The Right Way Detail. How are you doing? User 60, 25, 74, 22, 63. I'm new here. What is the difference between what you do and trading? Well, I am a trader. I buy, I sell, I buy, I sell, I buy, I sell. That's what traders do. Hey, Poseidon's last molar. I'm going to agree with you. Because, you know, when you're gambling, the house has the advantage. Here, as an investor, we get to choose our own positions. We decide where we get in, we decide where we go out. All right, send where to look at Sony. Oliver, hello. I can RR 111. I have no idea what that means, Oliver, but okay. Rob, told you Vax Art was going to do well. Just keep a Dragon. You talked about Coles yet? No, we haven't talked about Coles yet. All right, Rob. You know what? Vaxart, great. It worked out for you. Wonderful. Great. Awesome. However, Rob, I don't do capital appreciation. I don't. But you bought it at 60 cents. Great. It's at $1. All right. So you made 40 cents. 40 cents off of 60 is 60%. Okay. Great. Good for you. Awesome. I applaud you. Wonderful. Okay, I'm 60 years old. I have no desire to play that game. You know, and I believe I told you then, when you mentioned it to me a couple weeks ago, I don't play the capital appreciation game. Okay, I'm 60. I have no desire to go back to work. I don't. I've been working since 1973. Okay, 1973. You probably weren't even born then. I've been working since 1973. I have not had a wonderful gravy life. I haven't. I've had my challenges. Okay, we all have. Okay, I'm looking for cash flow. I'm not looking to buy something and wait for it to go up. That's what I told you a few weeks ago. US 30. I have no idea what that means. Jit Ladell. You can spend $14 on a specific stock alone of your choice. Yes, I can. Felix, did you check Bristol Myers Squibb yet? Yes, we did. Virgil, thank you for that. Mario, yes, Bristol Myers Squibb, we talked about, great company. Yes, it is. I mentioned VXRT to you a few weeks ago. All right, great, wonderful. I'm sure I told you the same thing. I just told you just now. Looks good, nice premium. Friday was up, so he likes 2 days the upside. Thanks, Redneck. Okay, Anobi, Fifth Third Bank, I told you that 4 times already. We already looked at Fifth Third Bank. I'm not going to tell you again. Johnny C. Good return with $1,000 to invest. What do you recommend? All right, Johnny, I don't recommend anything. And I also tell people, Don't ever listen to a random guy on YouTube. Yes, I'm a random guy on YouTube. You do not know me. You and I have never talked. I don't know who you are. I don't know what your risk parameters are. I have no idea anything about you. I cannot recommend you anything. Sorry. All right, Rob, please. I'm going to ask you nicely, Rob. VXRT. It doesn't fit in this program. Okay, I know you want to be the savior of the day and help people out, and I applaud you for that. Thank you very much. However, it doesn't fit. All right? Can you review Lucid? Ooh, Lucid. Is Lucid still in business? Has no options. Sorry, dude. Do you trade futures? Not anymore, I don't. Dollar General, Samson. Ooh, I like Dollar General. Dollar General. Ooh, and I like these big drops. I do. Okay? Ours are high. Here's our low. Here's where it was. Here's where we are. 85.75. The 85s are going for 140. That's over 1.5%. I love 1.5%. All right, stop. You asked me about Upstart before. I already said no to Upstart. Please don't ask again. Lambtran, haven't looked at Walgreens yet. We'll look at that in a bit. Let's finish up with Dollar General first. Okay, a year ago we're at 120. We hit a high at 168. A bottom at, was that 78? We're currently at 84. Okay, let's zoom into the last 30 days. Now the reason why I like the last 30 days, it gives me an idea of where the stock is going next. It's not guaranteed. Nothing's guaranteed except for death and taxes. But here we are. Look, 30 days ago we're at 116. We topped out at 126. Then we went from 125, dropped down to 84. That is 25, 35, 40. That's a $40 drop. A $40 drop on a $120 stock, that is a 25%, or close to it, close to 25% drop right here. Well, what do you think is going to happen with a 25%, especially with Dollar General? We're not talking a store that you haven't heard of. There's a bunch of Dollar Generals just here in St. Petersburg. I think it's like 3 or 4 of them. Okay, but our 30-day bottom was 2 weeks ago. See, went up, pulled back down, get 3 days to the upside. We're sitting at 85 at the moment. 85s are paying $1.40. $1.40. Let's whip out the calculator. People love calculators. Okay, so if I buy it first thing Monday morning, $84.99. First thing Monday morning, $84.99. And my profit, if I sell a covered call. Now, a covered call is one of the safest trading strategies there is. SpongeBob. Well, SpongeBob doesn't understand math. We're going to take a look at it in a second here, SpongeBob. 85. Currently, it's at $84.99. Okay, $84.99. The closest strike price is going to be the 85. The 85 is going for $1.40 a share. So I'm going to clear this out. Put in $1.40. That's my profit. Okay, how much did it cost me? Well, it cost me $84.99. $84.99. Grand total of 1.64% for the week. So, SpongeBob, I'm not quite sure if you understand math very well, but SpongeBob, okay? Dollar General, it's not an obscure company like nobody's ever heard of, okay? Most people have heard of Dollar General. It's been around for quite a while. Now, if I'm buying first thing Monday morning, $84.99, and then I sell a covered call for the closest strike price available, that is the 85. Okay? The 85 is currently selling for $1.40 per share. So $1.40 per share divided by the purchase price, $84.99, comes to a grand total of 1.64%. Now, just out of curiosity, if this is a weekly option, September 24, which expires next Friday, if I do that every single week, because it's 52 weeks in a year, right? If I multiply that out times 52, 52, it comes to a grand total of 85% year for profit per year. Okay, now I honestly really don't care whether you believe it or not that you can't do 1% every single week. I do 1% every week. It doesn't bother me a bit. We already did that. Already did that. VRTX, yep, I already did that. All right. Dollar General, yeah, we already did Dollar General. Wang, hi, maybe I missed it earlier, but why Comcast is not good this week? The numbers don't work. It's actually that simple. Okay? CMCSA is Comcast. Comcast currently right now, $39.75. The closest strike price is going to be the 40. The 40 is going for 31 cents. 31 cents on a $40 stock is less than 1%. That's going to be a no. Absurdity. Where do I start learning this? I want 50 cents per year. All right, absurdity. It is time consuming. It's not that difficult. It was created for a 9-year-old. My 9-year-old daughter back in 2008 said, Daddy, can you please teach me what you're doing? So it had to be simple, safe, predictable, consistent, and no way that she could lose. All right? That's the 5 criteria. 5 rules came along with it. Never buy something you don't understand. Never sell at a loss. Make sure the company is consistently profitable. Me, I like 20 years of consistent profits. Okay? 4, make sure it has weekly options. Weekly options are key. Okay? Profitable, weekly options. And 5, make sure the numbers work. Now, we had someone a little bit ago, I don't remember who it was, who doesn't know anything about math. If the numbers work, what am I buying it for? What's the covered call I'm selling? What's the premium I'm collecting? How much of a rate of return is that? Is it over 1%? Great. Now, make sure the numbers work. Where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it currently? And where is it moving? How is it moving? Look, down, up, down, up, down, up. What's going to the upside? But it's still not giving me 1%, even though it's a great time to buy based on the chart. It's not a great time to buy based on the numbers. Okay? Now, we're all here to figure out how to earn more money on our money. Safely, predictably, consistently, all that kind of stuff. I do like Comcast. Okay, it was incorporated in 1964. They get over 64 million people every single month writing them a check. That's freaking awesome. But the numbers just aren't working this week. Sorry. All right, let's keep on going. Absurdity, you're new here. Trust me, I remember that name. Okay, let's take a look at WBA. We haven't looked at it yet. WBA. And we haven't looked at Kohl's yet either. So let's take a look at that. Now, WBA a year ago was at 22. Jumped up to 26, dropped down to 8. Now it's at 9.20. Now, I've been hearing a lot of crap from a lot of people about Walgreens. Now, I don't mind Walgreens because I consistently sell Walgreens covered calls every single week, and I bring in a premium every single week, even though it's down from where I bought it. I forget where I bought it at. I think I have Walgreens in 3 or 4 different accounts. But absurdity. You're new here, keep showing up. I'm here every single night, Monday through I'm here every night at 9 p.m. All right, let's keep on going. Dun, 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 dun. I want to 300 daily. Yeah, have fun with that one. You can do this. Oh, yeah, you can go to YouTube. Yeah, you can start. There you go. SpongeBob, he buys covered calls, not. Sell them. Yep, absolutely. SpongeBob, he's not selling a course, buddy. Actually, Redneck, I'm actually going to put a course together because I get a lot of people every single week. Someone asks me, "Oh, do you have a course? Do you have a course? Do you have a course?" Yeah, I'm going to throw one together. I'm going to make it, not hugely, not hugely expensive. I hope you. All right, Wang. Hi, where do I find stocks yearly movement? How many years is it? Oh, Wang, it's an interesting question. All right, now, Wang, I don't know, because you're new here, because I'm good with names. I've never seen you here before, other than today. All right, I don't know if you've actually downloaded Thinkorswim onto your computer. It's free to download. Okay, it's owned by Charles Schwab. They do want you, they will let you use it for a while, but they do want you to open up an account with them to continue using it. Okay, now I don't get paid anything, for and I don't recommend them. You find out what trading platform works best for you. It is what it is. I like this. I've been using this for over 20 years because it has everything that I want. All right, so on Thinkorswim, if you come over to right here where it says Style, okay, come over to where it says Style, click on that. This drop-down window pops up. Okay, chart mode. I have it currently set at the standard. Okay, so I go over to chart mode, and a new window pops up, and that comes to seasonality. Now, seasonality is a whole year. Now, this one, January 1st to December 31st. This has 10 years worth of data. I can change that by going up to this icon right here. Right next to the style button is the time frame setup. So if I clicked on the time frame setup, well, here you go. I can look at 1 year, 2 years, 3 years, 5 years, 10 years, or 20 years. I like 10 years. 5 years is not enough information, my humble opinion. 20 years is too much information, so I like 10. But that's just me. You have to figure out what works best for you. Pakaris, what if I want $1 million contracts? Okay. My my father-in-law used to say, he said, he said, okay, wish and pray in one hand, shit in the other, see what gets you further. That's for you, Pakaris. All right, SpongeBob, I'm doing options. Yep. La 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 la. They will fill the gap. Usually they do. Told you weeks about Kava. All right, brown hornet. Okay, I remember a lot of people told me about Kava. Okay, Kava doesn't fit. It is actually that simple. All right. Was 85 now 120. Well, great, awesome. I hope you bought it at 85, and I hope you still have it at 120. Good for you. HP. What the heck is HP? HP. Heimlich and Payne, yeah. Heimlich and Payne is a monthly. Okay, even though Heimlich and Payne is a dividend king, okay, and they have been increasing their dividends for more than 5 decades, it's still a no. Sin. So you buy, and then when it's high, you sell them, and then you leave them in there for a bit. Not necessarily so, Sin. Now, you're still relatively new here. I take a look at the stocks, and there's a lot of stocks that I follow. So if you've been here for a while, you notice there's certain stocks I talk about over and over and over again. Well, there's a good reason for that. Okay? Like I said earlier, there's 9,642 different companies to choose from any single day. Now, I like companies that have 20 years successfully profitable. 20 years. Okay? Now, there's not a lot of them that have 20 years of successful profits. Okay? And then you throw in weekly options. Well, that takes you down from 9,642 down to about 300. So if I'm looking at 300, I can follow them on a weekly basis. And the reason I can do that is because each quarter, okay, most of the stocks pay every quarter, every 90 days, each quarter. Okay, January, February, March, quarter 1. April, May, June, quarter 2. July, August, September, quarter 3. October, November, December, quarter 4. We are currently in the tail end of the third quarter. Okay, so the tail end of the third quarter, actually week number 12. There's 13 weeks each quarter. Week 1, 2, 3, blah, 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 blah. Okay. So, week number 12 for the quarter. That would be right here. Okay? Seagate, General Electric, Medtronics, and Newmont. From this list. Now I have about 7 lists, but those are the stocks for this week. That's it. Just those 4 on this current list. Let's move over to another list. Okay, we got Seagate, General Electric, Philip Morris, Medtronics, and Newmont. Okay. That's all I look at. Okay, I don't look at these here, McDonald's, Nikes, Halliburton, Schlumberger, blah, 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 blah. I don't look at those. I don't look at these. I don't look at these. I don't look at these. These are the only ones I look at for the week. That's it. 5 stocks for the week of, it's the 12th, yeah, 12th week of the quarter. That's it, 12th week of the quarter. Those are the only ones right there on this particular list. Okay, next week, I'll be looking at these. Bristol Myers Squibb, NTEP, Cisco, Comcast, Cisco, AGNC, DE, John Deere. John Deere, Nelly, Manderley's, US Bank. Okay, that's all I'll look at. I won't look at anything else because it doesn't mean anything to me. I'm looking for companies that are consistently profitable. Well, that's number 1. I take them, I put them into the calendar. Great. Just before the EX date, that's when I want to buy them because stocks have a tendency to go up just before the EX date. All right, Sin. All right, here you go. What is the premium that you would purchase? I don't purchase a premium. Okay, Zeverlast. All right, Zeverlast. All right, 80% of all options expire worthless. So I don't buy options, I sell them. Because I want the odds and probabilities in my favor. Okay, so if I was going to buy an option, well, I have a 20% success ratio. Why would I do that? If I sell an option, well, now I have an 80% success ratio. It's a numbers game. Okay, stocks go up, they come down. They go up, they come down. They go up, they come down. Well, here's a good place right here to buy this one. Because right now, it's at the low of the year. The best place to buy is the low. Okay, you have the low of the year, low of the 90-day period, low of the 60-day period, low of the 30-day period. However you want to choose to your entry point. I like my entry point in the 30-day. Because 30-day allows me, what did it do last week? What did it do the week before? So if you take a look at the last 4 weeks, it gives you an idea of where it's going next week or the week after. That's why I like the last 30 days. The last 30 days on this one, right there. Okay, so here's the last 30 days on this one. Okay, here's the 30-day high. Was it 35.30? And then she drops. Wednesday was the 30-day bottom. Okay, Thursday was an up day. Friday was a down day. But it still isolates this as a 30-day bottom on this Wednesday. Okay? All right, so let me keep going. It is about 11:30, so I'm going to finish up with just going through the questions. We're not going to look at any more stocks. And then you sell and make your money when you get the dividend. Not necessarily, Sen. Okay? I buy the stock, I sell the option. That's when I make the money. If I collect the dividend, well, that's kind of like icing on the cake. I can't wait to come back. Well, I'll be back here again tomorrow. NVIDIA has some pretty predictable price action right now. Push Keys, how are you today? Now, Push Keys, you're new here, so I feel bad about picking on you. But NVIDIA, a couple of weeks ago, was at $1,200 a share before they did a 10-to-1 split. But here's one thing. If you're buying NVIDIA, well, that only tells me that you haven't done any research whatsoever. Okay? NVIDIA dividend is 1 penny per share. That's it, 1 penny per share. And they haven't increased it. Okay? Secondly, the book value on NVIDIA when it was $1,200 a share, was $2 a share. It did a 10-to-1 split. Guess what the book value is? $2 a share. It hasn't changed. Okay, so if a judge orders the company to liquidate and pay everybody off, that $120 you just paid for that stock, you're getting $2 a share. That's it. That's the book value. If NVIDIA sells off everything they own, all their patents, all their contracts, everything, the pencils, the papers, the erasers, the trash cans, all of it, they sell off everything, you're getting $2 a share. I don't like NVIDIA. Sorry. You didn't know that, Virgil. I can tell. Regarding Macy's, I was referring to the premium, 2 to 3 strikes out. Yeah, that's tough. Yeah, you're absolutely, Secretary, you're absolutely right. Now, some companies, you'll see that they have better premiums, and some of them don't. I don't like the watch list on the screen. Oh, you don't have a watch list on the screen? Neil, then I'm going to assume you don't have Thinkorswim, because Thinkorswim has a watch list. And if it's not on your watch list, okay, if you don't have a watch list and you do have Thinkorswim, you go right down to this little plus sign right here at the bottom left corner. That's why I'm listening to you, Jim. Way to go, Virgil. Okay, so Neil, if you have Thinkorswim and you don't have the watch list, come down here to the bottom left corner, that little plus sign. You click on that plus sign, and it will allow you to add whatever you want. So you can add account information, calculator, dashboard, FX currency map, blah, 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 blah. Watch list, right there. You just said add, and it just adds it to it. That's if you don't have it. All right, so let's continue up with these. AG&C dividend had been dropping in 10 years. Ooh, we'll have to take a look at that one. What expiration period do you use? I do 10 days. I mean, sorry. I do weekly. So Monday to Friday, 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 Monday to Friday. Okay? I grew up, like I said, the 60s, 70s, and 80s. Okay? My very first job, go to work at 8 o'clock in the morning, come home at 4. Same thing with the stock market. Monday morning, I jump on at 9 o'clock. Friday afternoon, I'm done at 4. That's it. All right. BTI. All right, come back tomorrow. Ask me about it tomorrow. Buy on Monday, options for Friday. Yep. Nelly. Ooh, Nelly is on the list for this week. Sell the 2050s, 2 weeks in a row, and wait for the 9:30 expiration for 60 cents, 65 cents. Well, 65 cents off a $20 stock, that's a 3% trade. Nike's a steal below. Okay, cool. Mike Terrell, how are you today? All right, what else we got here? 86 blocked SpongeBob. Hey, it is what it is. You don't play nicely, you get kicked out of the sandbox. All right, Alan, come back tomorrow. Ask me about BA. Got a YouTube? Of course I do. I got 2 YouTubes. One is The 10-Minute Trader, and the other one is under my name. Do you know? No, I don't. H-Band. Luke, ask me tomorrow. I'm about ready to sign off. Picaris, my other comment got deleted. Oh, sorry. What if I wanted to be... Yeah. I saw that one. You can do $1 million contract. Will Nike get over $100 soon? All right, Michael Terrell, ask me tomorrow. I'm getting ready to done for the day. Where can I find your formula? I don't have a formula. So what would you put... So what would be a put correct? You're going to have to explain that a little bit more. I don't understand what you're talking about. What's the name of the premium in the option grid? I don't even think it has a premium. Okay? It's just bid or the ask. That's it. Bid or ask. Okay? And the strike prices, $17.50, $20, $22.50, $25, $27.50, $30, $32.50, blah, 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 blah. Okay? So, we're past 11:30. I made it the whole night. Yeah, for me. All right, so we're going to catch you guys again tomorrow. Thank you, sir. You are welcome. All right. Do you buy calls or puts or sell calls? I sell. Okay. I'm not a buyer. I'm a seller. I have Thinkorswim. The only thing is on the right bottom, and it's okay. Neil, the left bottom. Okay, not the right bottom. The left bottom is the plus sign. Okay, I don't know if you can see it. It's the plus sign at the bottom left. Okay, you click on that, and it allows you to add more fun things. Okay. Account information, live news, live audio, market depth, message center, quick quotes, blah, blah, blah. Watch list is right down here at the bottom. Ooh, that's uncomfortable. What the hell was that? Dooley drama. Mike Terrell, what's the difference between Webull and Thinkorswim? Huge difference. Thinkorswim has so much stuff. I haven't been on Webull. I've been on Webull once. I didn't like it. Okay, it didn't make very much sense and it didn't flow, okay, which is kind of different because this thing doesn't flow at all. This is confusing as hell. You actually have to have someone go in with you and eliminate all the stuff that doesn't mean anything. Because when you sign up with Thinkorswim, the very first thing you're going to see is going to look very confusing and overwhelming. Tammy, how come you haven't been on TikTok? I'm on TikTok right now. Don't have anything on the left side. Neil? Oh. All right, Neil. Does it look something like that, Neil? Nothing on the left side? Take your cursor and put it on this line all the way to the left, and you see a little arrow pop up. Okay, a little double arrow. You click and drag it. Okay, click and drag, click and drag, click and drag. Goes either way. Okay, click and drag it somewhere into the middle, and then you'll see this little plus sign down to the bottom. I haven't been seeing you. Well, Tammy, I'm on there right now. Okay, I got YouTube here, TikTok there, Instagram there, Facebook there, and another YouTube channel down here, and another TikTok channel there. So it's there. Yep, I'm keeping myself busy. I'm looking to get a couple more cameras going because I'd like to do a few more channels. I like to get rid of Facebook, but you know the phone's already there and it's already hooked up to it, so I like it. I'm glad you like it there, Virgil. I'm having fun in my retirement. Okay, in case you guys were curious, I'm having fun in my retirement. All right, so this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, using nothing but pre-qualified dividend stocks, and those, my friends, are companies that have consistently increased their dividends for more than 20 consecutive years. 20 consecutive years. Safe, simple, predictable, and consistent 1% per week. That's my goal. Taking you guys along for the ride. If you like it, great. Ask questions. But do yourself a favor. Do your own research. Don't listen to anybody online. There's 27 other people pretending to be me. So if you really, really want to talk to me, drop me your phone number and I'll call you. All right, you guys have a great night, and we'll see you again tomorrow. Tomorrow. I'll see you tomorrow. I found it under the line. There you go, Neil. Way to go. Minty Fresh, how are you? Have a great night, you guys. See you again tomorrow. Why isn't this moving? It's going the wrong way. There we go. Off. Off. Ooh, what is that? What? I know what the hearts are. Those are cool. But what is that little blue line? Or is that sharing? I have no idea. All right, well, you guys have a great night, and we'll see you again tomorrow, because the sun will come out tomorrow. I live in St. Petersburg, where it's lovely. All right.